Good morning. Hope everybody had a great weekend. Let's get some charts up here. And close that, close that. Where's my good morning? Hope everybody had a great weekend. All right, so it looks like possibly this thing can go vertical, meaning the markets. As they cleared the last resistance area here, the S&Ps, as you'll know, the Qs already did that. They made all new all-time highs last week. So now as the S&Ps have cleared the last pivot high, there's nothing to stop them from going up. As you can see, well, let's just move our little line up here. Got an unfilled gap right there. But hey, if it can go from here to here, somewhere in here, that little open window is going to stop it. Well, we'll see when it gets there, if it gets there. Look, we always have two scenarios here, and we'll look at the SPX and the spiders, but you've got a range expansion bar. And the reason I want to look at the others is because the others gapped up. But whenever you have a range expansion bar after, and remember, this move started here from the bottoming tail bar. And then this was a consolidation. And you had that correction bar right there. And up it went and so on. So when you get a wide range bar after a move, so you can see the wide range bar igniting, and this one potentially ending. That's just the way we read it. And we'll just see what actually happens. But so now a break under that bar's low will set a short-term top. That's theoretical, of course. So that bar being down here, if it gets under this little consolidation here, this little chop right there, that opens up the door. So down below here, I'm going to be thinking short, and obviously it'll be a scalping type short. It's got a void down to this area. And as long as it holds that, the assumption is it goes higher, right? How else could you think anything else? And, got an oscillator on there and it's overbought. Just take it off the chart because as this is moving up, unless it breaks a prior day's low or it closes deep into this bar, the assumption is it's going to keep going higher until it doesn't. Right? So indicators don't matter. And even our market internals don't matter, to tell you the truth. But they are telling us that, look, you better be watching the exit door here because historically it's a problem. So when we got breadth up here close to plus 300, after this move has been going on for a while, and you've got sentiment poking up above the highs, it's coming. I don't know whether it's going to be here or up at the resistance, but this is telling us that there's going to be some corrective action coming. It could be sideways for 2 weeks or whatever to work this off. But if this goes vertical, well, then historically it means it's going to come down, right? It'll come down. The more prices push up in a vertical way, the greater the probability that they come down in a somewhat vertical way. It's like shooting a bullet up into the sky, and eventually as it loses momentum, it comes back down at you. So let's see what the others are. Now let's go to SPY first. And you can see the gap up. Right? So in the letter over the weekend, I pointed to the fact that gap, right, unfilled, gap, and big gap. So wide range bars create voids. Well, big gaps create voids. And so this is at 321. So it's gapping up a little bit. Give or take, it's up there near that high. So what we're going to watch at the open, does it keep going or does it come back down into Friday's range? And if it does that, well, then we'll look for the gap fill to come down there. And if we do get the gap fill and it stays down there at the end of the day, well, that would be a big reversal. And of course, then we're looking for prices, right? We got a short-term top, so on and so forth. Internals told us be careful and all of that. So this was the last time our internals reached an extreme together. And we got a little blip to the downside. It happened here, and it was more sideways chop. And now we've got it again. And we'll see whether this one produces something bigger. SPX. Right, today is Monday. So I guess the first thing to do is just to see how much premium there is on the trade table and whatever's reasonable to get far enough away. I mean, after this move up, so we said the move started here and it rested. So we said, okay, from here to here, that's one move over the course of a week. And you had a big gap up. So any kind of weakness in the morning, this doesn't tell us anything, where it comes back into that range, wherever the premium is far enough away, and there's a void, so there's risk there that this market does take off. So I'm going to want to see a relatively nice size reversal to the downside before considering a call spread. And put spreads, I'd say anything down below here, which is far away. It's hard to believe there's going to be any premium, but anywhere down in here would be far enough away, 30, 80. So you got that shelf of support there. Well, we'll see. 3150 or higher for juice. 3150. Well, that's nothing. Not for me. 3080. Well, you'd need a collapse, and then would there be juice? We'll see. Maybe it's not going to be a good day for this. We'll see. Let's keep going here. All right, so there's NASDAQ futures, the same range expansion bar. It took out the prior high. And here we have the concept from MTS of after a greater than 100% retracement, odds are you're going to get a stall in momentum. It's historically what happens. We'll see if it actually happens, and we can see that so far. I mean, it's early. We've got a narrow range bar. So we'll see. You know, it's the beginning of the day, as always, and we'll just see how it progresses today. And the factory work with this is to say, look, that's a wide range bar. And the middle of this wide range bar, sometimes there's nothing there. And say if we cross through it, is this minor support. So wide range bars, we want to see trading stay in the upper 50%. Now, and wide range bars, and the reason for that is that because a wide range bar is a momentum move in a smaller time frame. And there you see it, blast off. Right? So there's nothing underneath here. So what we want to see is that prices, while subjective, right, we'd want to see them stay over here. And the concept here, the idea is that even though there's no support under here, buyers keep coming in and create support. So that's the idea behind a 1, 2, 3 continuation pattern, in that the 1 bar is a big bar, the 2 bar is a consolidation day that creates support, and the number 3 bar, or sometimes it's the 4th bar, is the continuation bar. Qs, let's call it 240. Just opening up there, no big deal. YM up 242 points. All right, consolidation on the hourly. Finally cleared the 200 last week. Wide range bar up, cleared the pivot. Everything looks like it should go higher. And if it breaks below, if I can grab that line, if it breaks below Friday's low, all bets are off on the buy side. So it's either acceleration or Let's see. It could be a consolidation day. You know, every day we see what it is. We look at the structure intraday, what was left there, and what we see is some consolidation going on here. The little narrow bar below that opens up the door to retrace into the wide range bar. There's nothing up above to stop it from going higher. The trend is up here. The trend is about sideways here, I guess. It looks like close to, maybe it's not quite 80%, but give or take, it's retraced quite a bit. We had that chop for 6 or 7 weeks over here. So let's see if it'll keep going up. Bringing up the rear is the Russell, and just peekabooing up above that resistance there, up above the 200. All right, consolidation and pushing up, nothing to stop it from going up. So on all fronts, there's little to nothing to stop the markets from going up. That's the way it is right now. Bonds are dropping, and as we spoke about yesterday, there's a positive and a negative to this. The positive is, as bonds fall, interest rates go up, and if interest rates are going up, there's a belief that there's going to be a demand for money, which means that the economy is going to come back, even though everything's been in lockdown. So that's the belief. The other bad side is, at some point, interest rates get high enough where they become attractive enough to move out of equities. And we'll just see at what point that happens. But so we always look to the left. And so you got 170 here, a whole number, and the bottoming tails. So you've got a closing price here at around 170. That's the tail. And then the reversal. So buyers should step up here for bonds. Right? You can see they attempted to here, and it's holding. So somewhere in here is where I would expect bonds to begin to stabilize. Oil down a little bit, but coming into the gap fill. So you want to keep an eye on this. And, if oil starts coming in, the oil stocks performed quite well. I think they were the best performing sector last week, percentage-wise. And they've been, like the XLE, they've been dogs for a long time. So those energy stocks, and they've had this disconnect when oil was going up, way back here. They really didn't participate. And then they kind of held their own. So, energy seems like, maybe it's turned the corner here. And you can see how XLE went up as oil went up, but, further back, it just wasn't able to get out of its own way. So maybe buyers on pullbacks for this, but, similar to the market, going up, a gap up. This is close to some resistance. Just makes sense to think that a lot of things are going to start coming in. Are you still on the intro page for me? No. If you're looking at Dan and I, which I guess isn't such a bad thing, but no, we've got charts up, Derek. You need to refresh. And gold perking up a little bit, right? A little bit. It's stabilizing here. It's down at major support. So down at this major support, if the markets should start to come in, I suspect buyers will begin to show up for gold. And silver, which is outperformed, it's coming back in here at the moment. So we'll be keeping an eye on that. And of course, the transports, they participated, they gapped up and they crapped on Friday. The airlines all came in. So we'll see. As we always do, we're going to keep an eye on these different markets and see how they interact with each other. And we'll continue to update all of that in the green room. So all yours, Dan. And we got a couple of requests here in YouTube to look at APHA and SNAP.
All right, good morning. ADHA, that sounds like a federal law. ADHA, all right, wrong symbol. Say that one again.
APHA.
Oh, okay, that's oil, I think. It's strong. It's strong, but it's bullish consolidation in the upper part of this wide range bar. But I think we can find better. It's just not compelling. Had some morning strength and it's coming in. It's very sloppy the way it trades intraday. Snap. Yeah, I actually saw this in Barron's and like a put spread under Friday's low. That's a nice bar there after 3 sideways days. Pre-market, fairly neutral, but now it's at the highs. It looks higher. Maybe we got a big gap here. Well, the Qs are weaker, but diamond spies. It's Monday. I like waiting 10 minutes instead of 5. Let things digest on Mondays. Let's look at our opens here. We actually closed a lot of stuff into strength on Friday, so our inventory is down a lot more than it was on Wednesday and Thursday. ADS, we have a covered call. Azul for you all. Yeah, Devin, I'm going over everything now. Let me give you Azul. We sold the final third. Let me get this for you. Look at that. We sold look at that, folks. We sell in the strength. We sold into this first gap up last Wednesday. We sold another third into Friday's gap up. Look, at the high of this pre-market was 1650. Look where I sent out an alert to sell, 1640. Thank you very much. We're on to the next setup. Yeah, the Jets, which is the ETF for airlines. I mean, that market last week just ripped, and then that's a classic gap and crap setup. So I'm actually very shocked of the big gaps in the airlines today with those ugly reversals. We still have Gall, Charles de Gaulle here, and I also said sell a third pre-market. Let me get you that one. And folks, in the green room, I've said this many times, but this is it's another example. If you are not subscribers to the letters, you don't get Telegram. And look, we sold a third of this for $9.20 pre-market. It's $1 higher. We already sold this. And we have a third lot left with a stop 30-minute low. And that's our factory work. That's how we manage these things. There's some questions here. Let me continue with our opens here real quick. H, we have a covered call. The hotel there. So we've been in these beat up sectors. Trust me, we've done well. We've been trading airlines, been trading cruise ships, restaurants, casinos, hotels. We still have one cruise ship left here. We're short puts in addition to a covered call. That looks great. And finally, UNH, we have a covered call. So that's it on the swing letter. On the weekly options trader, this Boeing is it's been a headache. We sold a call spread on the last week, and then right with this weakness into the close right here, we sold another out of the money call for next week. Big long-legged doji, unfilled gap far from the 20. I mean, the strength is, you've heard me say it about the broader markets. I just shake my head. There was a statement in Barron's that some hedge fund or money manager guy, he said, and I'm paraphrasing, we're at the top 10% of highest PE ratios for stocks. and he sees we're in the top or the bottom 10% fundamentally. So is that a disconnect or what? But we trade charts, and we've been trading bullish patterns. I just scratch my head about the disconnect, but I'll just keep scratching my head. That's all. So to answer your question, if our factory work, as we say, gapping over our stop, we got to use a 30-minute high, and then we'll see if we want to take a stop, if we want to add to it, if we want to do an adjustment strategy. I don't know yet. I need to wait 30 minutes. Let's see, McGraw. Well, I don't care what he says. I mean, we'll talk about it more later, but you know my view on it. You're paying more for a broken down automobile than it was 3 months ago. Now it's all damaged, and everybody's closing their eyes and saying, that's okay, I'll give you full price for that house. Maybe not the beat up car. Let's say the house caught on fire and it's severely damaged. Oh, no problem, I'll give you full price for it. Who cares? That's how I view the pricing right now. I don't get it. You've heard me say that. I don't get it. Grub, we have a put spread. It's doing nothing. Walmart, we have a call spread. Up a little bit. I tightened the stop on Friday. It looks fine. Still dragging, lagging the diamonds. That's it. Those are all our opens. Somebody on YouTube asked about NEM. And, many of these gold stocks are buy setups on the weekly charts. What's a buy setup? It's an uptrend, 3 or more bar pullback, some type of support and reversal. And so that's on the weekly. But you had bearish reversals after climactic sell setups. You got a downtrend here on the daily chart. It's made lower pivot highs, lower pivot lows, and it's under the 20 and the 50s. You got conflicting time frames. So the step one is, what time frame are you trading? On the 15-minute chart, it's a bullish gap and bullish consolidation. So for a day trade, 30-minute high day trade is fine. But this daily is not a pattern that interests me at all. Why? Because there's no compelling setup. It's that simple. All right. Mac, so many of these little beat up stocks are gapping. The entry was last week. I got no interest in Mac. Tyson, we have as a long over Friday's high. Why? It was a gap breakout. It's red. If it trades above this, it's red bar ignored, and that's a price void. It's gapping up here. So our rules say 5-minute high. Yeah, I think there was some mention of some food stocks in Barron's. I think I remember USFD. Yeah, USFD, another gap breakout Friday. Wow, that one's gapping way over Friday's high. And these are obvious put spread candidates too. XOP, these oils had amazing days on Friday. Amazing. Now with today's gap, I'm not chasing. Hertz here, here's another head scratcher to me. This thing is already in bankruptcy, and it's gapping up. So the only reason, in my opinion, it's doing that is people think it's going to come out of bankruptcy much leaner and meaner, and they're again pricing in future cash flow, or they're stupid. Someone's telling them, "Oh, buy this; it's cheap." Everything's coming back, but they might not correctly be understanding the bankruptcy component. But it's not my game. I got no interest in that. Jeffrey HCA, inverse head and shoulders. Possible put spread. Yeah, definitely. Right. So you know our methodology. compelling pattern, then go through the checklist, which is, and the one that we get kicked out, vetoed so often, is illiquid options. So that's step one. Go see if they're liquid. Step two, what can you get for out of the money under support? How many days to expiration? Make sure there's no news, pending news, earnings, and so forth. If all that sounds good, you put the trade on. Absolutely. Yan's asking about Oxy. Yep, this was actually, I wish I saw it earlier on Friday. Somebody did mention it into the close, and we have this as a put spread in our weekly options letter for over the weekend. The gap, I'm just not a chaser on these gaps, but I actually grabbed this screenshot for Greg for our MT live this Wednesday on WRBs, because I was showing not only an X-ray of the WRB, but I was showing this intraday to say that it's strong. This was an acceptable continuation pattern if it opened flat, but now it's up another 15% or whatever. So I have no interest in things that do that unless they set up again. Arun, ARLP. It's lagging, but yeah, it had its gap breakout on Friday on volume. Yeah, that one's worth watching. ARLP, I'll write it down. Yeah, I like the W bottom on the weekly also. Yeah, that's worth watching. Now it's up 37 cents, which is 10%, so it's up big right now, but it looks higher. And BT, yeah, that's a wide range ignited bar, sure. But the gap's messing it up again. These are just, we have so many examples of them, coming for the junk. And that's obviously why the NASDAQ is weaker today. Khaled, I in my video I said we were in NMRK, and then somebody emailed me and said right into the close. See, it hit 634, and I had moved the stop to under this power bar, and look at that. That end of day decline just hit us at the low. If you are still in it, move it to under that closing pivot. Still looks fine. Kevin Everett, your drop down. Oh, you got it. OMI. It's lagging. It's lagging. Could not break out like many other things did, but over Friday's high might be okay, because then it'll be topping tail ignored. But I definitely wouldn't be doing it at the open. I'd maybe give it a 30-minute high. RRC. It's kind of a reverse head and shoulders. You got left shoulder head, right shoulder. You got room on the other ones. I'll put that on the list. Yeah, I like that. Google, yeah, Google over last week's high, I like as a put spread. Yeah, Tesla is running pre-market here. Wow. Wow. That has to be news. I mean, 99% certain. What would make that thing rally $20 in a half hour? Amazon I saw was strong. Apple had a strong close. That's a put spread candidate over Friday's high. Netflix, it's a mess. Facebook, it's consolidating, nothing to do there. Ahmad, your drop down. Ahmad, I personally, I typed in Ahmad, nice. I personally put this on the do not trade list for our subscribers, just because of the overnight risk. But day trading, I don't mind for us in here. that is a bull flag consolidation. It's a gap from a bull flag. It's extended using the pre-market data, so it's not